Every quantum leap, I'm finding myself trapped inside of people. Differences underneath the fundamental side of evil.
What's up, everybody?
That's why they say don't meet your heroes.
Coming off a strange, really strange tech issues this week. Not even sure if someone in the chat would let me know if you could hear that that background music. I would appreciate it. I'm testing out something new after this weird tech attack. It wasn't an attack. Restream is what the software that I use. Man, oh man, they had some issues with their servers. I was unable to even get into my into the platform where I do these streams. Got Eric in the chat. What's up, Eric, man? Good to see you. The song that's playing now is actually Finn Martin from Rack FM. For people that don't know, he is a white rapper from Oregon, a real hotbed for hip-hop talent in the United States, if you're not familiar. And he's got some cool tracks. And let me know if it's too loud, too low. I'm doing it in a certain way to get around the kind of the YouTube rules about streaming music. They don't want you to stream music. However, there's no copyright restriction on this, so I should be able to play it. But man, oh man, where do I even start? Well, we got a good agenda today. But before I get to that, let me welcome everybody to this live stream on Friday, aka payday for a lot of people. Joe here for Dead Cat Media, producing crypto and Web3 content that features information that matters most to you, the end user. That's right. All of this amazing technology doesn't even get off the ground without the end user, the early adopter, the retail trader, and the straight up degenerate. So if this feels like I'm describing you, then you're in the right place, of course. And don't get me wrong, we still have fun on this channel. We're talking constantly about token speculation, making bold predictions, seeing if they hold up, and also engaging in your usual crypto banter, which is always fun, speculative in nature to say the least. But I'm an educator by trade. I'm a teacher. And I know there's a science behind learning this new landscape, assimilating all this new information, and using it to actually make money, which is probably what you want if you're here. I'm an end user myself. I don't have a tech background. I navigate this space as you probably do. I'm looking for important trends that impact my bags, my tokens that I like, my tokens that I'm holding. I want to know when they're going to go up, and if they're going to go down, when should I dump them? So I constantly test out apps. I learn about new things constantly, and Dead Cat Media is the company that I built where I will pass all that information along to you, the audience of fellow end users. You can support me, by the way. You can support me by subscribing to the channel, by following me on Twitter, and even joining my Telegram. But I got my wrong Twitter handle up here, actually. I just noticed it should be the same as the YouTube one. I had to change it to avoid scams. People were trying to, go after some followers and offer products. I don't offer paid products to subscribers, audience members, anything like that. I do contests generally through my Telegram, and you can get that in my link tree. It's in the description. All my updated links they're in the description. I'll have to change that Twitter handle, but it should be Joe4DeadCat, just like my YouTube channel. So, man, we got this track by Finn Martin from Rack FM. He's got a couple tracks, been rolling them out, releasing them to Omniflix. I've also been releasing content to Omniflix, although to continue the trend of massive technical issues that I've been having, my ledger, this thing right here that I've had for like 5 years, it crapped out. It no longer updates apps, and I was using it to put content on Omniflix. The next piece of content that I put on Omniflix will actually be an NFT that people can collect. I don't know. I'll probably have it minting for like $1 or $2, something like that. I don't know how I'm going to reward people that collect my NFTs. I don't want to make promises, but NFTs are a good way for creators to track their dedicated audience members who want to kind of speculate on a piece of their intellectual property, which is what really NFTs allow people to do. It's the number one use case of NFTs. That and doxing wallets. That's really what NFTs are for. Going to bounce out of the audio track, and like I said, where do we even start? Well, the headline today is real world assets being eyed up by the banks. This has been a recurring theme since I started doing my stream. I've been loosely tracking this. Now might be a time to start tracking it a lot closer. We got decent CPI data, sub 3% inflation. I think what we'll do is next time we'll do an entire show on inflation, but do understand these numbers are subject to revision, but they are important because they do kind of dictate really what's going to happen with the interest rates. And if you follow my content at all, you'll know that the interest rates are really all that matters for crypto prices when you zoom out. And that's been my stance. I basically look at interest rates, Bitcoin halving cycle, and just current narratives, big narratives that affect the entire crypto landscape. And yeah, CPI is important because if CPI is not good, maybe it forces the US Federal Reserve to start cutting rates, right? In the Cosmos realm, we saw the Kujira token sale end. The debt should be cleared. That was tying up really all the Kujira platform. But one of their founders, Dead Right Dove, he is out. He is out. They're going to move forward without him. They've got JP Thor, a co-founder of Thorchain, which is a behemoth as far as Cosmos goes. He's now a whale that can't sell his tokens on Kujira. So is that bullish? Maybe it is. I did not buy more Kuji tokens. I bought Fusion tokens. And I'm only telling you this because you're tuning in early to my live stream. I bought Fusion tokens on Kujira's AMM. And that's the play that I'm making. I think it's a low risk, high reward play. The market cap is like 1 to 2 million, and they stand a chance to benefit from this new Thorchain migration, integration, whatever you want to call it. Man, meme coins have been tanking. Bitcoin did post a strong bounce since the rapid sell-off 2 weeks ago, 3 weeks ago, really. But now it's kind of struggling to find some footing. And then again in Cosmos drop, a liquid staking protocol backed by Lido. They they went live on Neutron and they are already attracting liquidity. Chris, I see you in the chat. Nice to see you, man. It's been a while. Couple, I lost some of my audience members who were day in, day out joining my streams and following me closely, but they have kids now. So they're like me. They have no time. So happy to see you over there, Chris. Maybe we'll catch up at NFT Nashville, which is coming November 2nd. We are looking for 1 or 2 more sponsors. What we're doing this year is a little different than last year, trying to have less sponsors so that we could do more for those sponsors. And the Atom Accelerator DAO did pony up almost double what we're asking of the premium sponsors. They ponied up almost double to be the marquee sponsor of the event, which is cool because that's going to allow us to put on a second day side event, which if you're involved in crypto and you've been to any of these things, the side event is where it really happens. So look for that. We're in the process of updating the website. I'll meet with Tank today. We've also been able to bring on Amanda from AK Events. She works for Akash, but puts on her own crypto events as an organizer, and we're going to leverage her talents quite a bit. Crypto Sailor heard me say Thorchain. He's an OG Bitcoin guy and knows quite a bit about Thorchain. I'll be meeting with JP Thor next week, hopefully putting out some content, I like putting out content from primary sources. There's no better primary source than JP Thor. I already interviewed Chad, other co-founder, a couple months back, so look for that in the next couple of weeks. What else? Oh, can't forget to shout out my sponsor. Right now, it's only down to one sponsor, guys. Shade Protocol, and yeah, Shade has been sponsoring my streams for a couple of months now. They're privacy preserving DeFi on the secret network. I have their link down below. It's a slew of DeFi apps that wrap tokens in this privacy preserving tech, and they feature the Silk stablecoin and the SHD Shade token, which acts as the DAO token that manages the whole thing. Now the fun begins. Now the fun begins. What do we got first? What do we got first? Not that. Not that. Not that. Give me a second, guys. That's what I want. All right, let's take a look at this. I like to go a little off topic sometimes. It makes it fun. Like, is there really anything more fun than going off topic from crypto, especially when your portfolio is underperforming by like 300%, 400%? But the Olympics wrapped up. Thank God the Olympics is gruesome. I don't like watching it, although I do have to say the TV coverage does make some of the stuff kind of hard to turn away from, like swimming, like gymnastics. TV coverage is great, but what would the Olympics be without, massive scandals? And I don't know, I always had mixed feelings about the Olympics. I feel like it's a way just to like launder money into cities that waste money. You see France and China getting just so many Olympics in the last like 30, 40 years, whereas like other countries get nothing, right? Other countries get nothing. So United States did win. It looks like 40 gold medals, the most silver medals, a bunch of bronze medals. I'd be embarrassed to win a bronze medal myself, but some people were like just happy to get something. We had just a bunch of images that were kind of weird from the Olympics. We had swimmers vomiting after their swim because the water was so dirty in France. We saw the same thing when they had the Summer Olympics in Brazil a number of years back. We had medals being stripped from gymnasts. I don't get that at all. And then we had like this alleged unfair boxing match. It's boxing with headgear. Who cares? That would be my take. But that dominated and continues to dominate social media. And then, of course, we had a break dancing. Break dancing. I think that if I knew break dancing was an event in the Olympics, I could have changed my citizenship and made it to the Olympics myself. I've never tried to break dance before, but I didn't see a lot of dancing over there. I just saw breaking. And I'm sure that'll be in the news cycle forever. All right, let's talk about prices a little bit. But first, got Grant Cardone. I've been following him for a long time across all platforms. Looks like I'm not following him here. All right. But he says the numbers don't lie. This is in relation to inflation. And like I said, the next show, we'll talk about inflation exclusively. Food up, energy up, electricity up, yada, 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 resulting in increased taxes, bankruptcies, consumer debt, delinquencies, unemployment. Unemployment's an overlooked effect of inflation, I have to say. And then reduction in savings, another overlooked effect of inflation. So Grant Cardone pushing hard. But he's a real estate guy. You would think inflation would be good for him because all his real estate goes up. Ambito, did Joe get in on the unicorn train? He's referring to this meme craze that was an airdrop in Cosmos, but now I guess things are happening on Base and Solana. So I was unable to claim my original airdrop. I complained to the manager. The manager said, give me your address, because it was a ledger address. And I gave him my ledger address. And then that was like probably like 6 months ago or more, 8 months ago. I just checked and I have 1 million of these unicorn tokens. What can I do with them? They're in my Kepler wallet. So I guess they're a Cosmos token. What can I do with my unicorn tokens or UU tokens? Man, oh man, what can I do with them? I think if I was on base, I'd be a millionaire, but I'm not. Couple quick news events before we get to the real world assets. U.S. government, apparently they've still got some Silk Road money coming to them, $590 million in Bitcoin. But an analyst here is saying that it's unlikely to be sold. It's saying the government could be looking to custody, I guess, with Coinbase or trade the Bitcoin. That's the same thing as selling, based on a recent partnership with Coinbase Prime. So if they trade the Bitcoin, my guess would be they're trading it for stablecoin. So that would be the same thing as selling effectively. I guess unless it's done over the counter. Over the counter trades, they're not really subject to the same price impact and all that. But the U.S. government has been transferred 600 million worth of Bitcoin to Coinbase. Geez, man, they're still recovering money from these historic exploits and scams from back in the day. 10,000 Bitcoin. So I'm guessing when this scam happened, the Bitcoin was only worth a couple $100, if that. Now it's worth 58,000. Payday for the government. I mean, if it was me, I'd be selling almost all of it. So you can't blame people for selling. You can't blame these governments for selling, because I don't think they either know what to do with it, or if it's just policy like we talked about in the past, where they have to sell these confiscated or seized assets. But that is an interesting one to follow. PayPal's stablecoins. Speaking of stablecoins, man, oh man. So PayPal has its own stablecoin, PYUSD. It is the 6th largest stablecoin after a Solana surge. So I don't know if you want that, right? If you want these Web2 pay rails and basically, merchant payment solutions. PayPal was probably the first one. I remember having it in college when I used eBay. This was like in the late 90s. PayPal's been around. So now they've got a stable coin. Obviously, there's advantages to using stable coins, and I'm not even sure what blockchain they're using, but it looks like Solana is the main one now, and now it becomes the 6th largest stablecoin. Solana, to me, was actually in desperate need of more stablecoins. This can only be good for Solana. I don't know if there are some drawbacks to this that I'm missing, but in the very first live stream I did 8 months ago, I said that stablecoin inflows usually come first before token prices go up, right? So I like this. I did buy Solana. Man, I messed up a massive Solana swing trade that I could have killed it on. But my Solana entry is, I bought a little bit at 75 and then a lot more at 125. I would love to see this go to 200 and change, right? I do think Solana has challenges with their inflation, but I would like to see it. I would like to see it go in the 200 range. Let me get my welcome here. And Ambito in the chat is saying you can trade with that token, that unicorn token. You could trade emojis. I am not going to do that. I don't want to do that. Can I sell it for anything? Is 1 million worth anything? I don't know. More Coinbase news. So I think this is huge for Base, by the way. Coinbase promotes CB Bitcoin. It's a wrap Bitcoin. It's an alternative to other wrap Bitcoins that's meant to be used for the Base blockchain. Remember, we talked about Base. I did a video, my last pre-recorded video was about Base, and Base doesn't have a token. It's the DeFi arm of Coinbase, and now they've got their own stable coin. So, man, this was teased by Jesse Pollock, the creator of Base, and he's teasing out that this could run on the layer 2. I think this is a good move for Coinbase again. I think Coinbase is doing just about everything right. They're becoming a major single point of failure, and also a choke point for U.S. government regulators. But from a business standpoint, they have their fingers and tentacles in every aspect of crypto, now stable coins. So this is also reiterating that despite some controversy over wrapped Bitcoin, BitGo, the company that wraps Bitcoin on ETH, their protocol remains stable. So this article I'll have available. And then the last thing is Drop. I have a referral code for Drop. I'll be playing with it this weekend. I'll share out the referral code if you're looking to dabble in this new liquid staking protocol. It's on Neutron. Neutron's about the only layer 1 in Cosmos that I'm really excited to talk about these days. I'm saying as like a DeFi platform. Drop is allied with Lido. I think that's a positive. It gives Stride some competition and some of the others. So I would appreciate if you guys would use I would appreciate if you would use my referral code, which I'll release once I have it all set up, and also put some skin in the game of my own. I'll probably dabble with, like, I don't know, 1% of my portfolio into LSTs, something like that. I'm not putting half my net worth into LSTs just yet, but I do want to get credit for the airdrop, and they are rewarding real activity on the platform, liquidity providers, with their airdrop. I did a Twitter space with them the other day. So, man, if you were on that Twitter space, it seemed like they actually had their shit together, and they're going to be a net plus for Neutron. Bushido saying so much better here than X. So frustrating. Yeah, I don't know why you would watch a stream on X. I am streaming to Twitch as well. I think I don't play around with Twitch quite enough, but happy to have you guys in the chat here. Let's get to our main story, the main event. Always takes a second. Let's get to real world assets. So what I wanted to talk about today is the tokenization of real world assets. And I know that I've talked about this before. This is not new. I've been loosely following this. Let's get it manageable here. That's not manageable. There we go. So, contrary to popular belief, the banks actually want this and have been preparing for this for a long time. If you Google any big bank, tokenized RWAs, you'll find stuff from, a year ago, 2 years ago, even 3 years ago. And I do have friends in traditional finance. And as early as 2021, 2022, they were showing me internal documents that prove that banks have been looking for ways to leverage blockchain technology for a pretty long time. They want things to settle on the blockchain. They want to be part of this crypto revolution on their own terms, obviously, and in a way that's transparent for regulators, so they don't have to worry about these surprise seizures of their websites and platforms and all that. clarity is important for these bigger players like banks. Here's the tweet that got my attention. I think this calls for some hip hop. All right. If it's too loud in the chat, just let me know. IBC gang saying, I have friends in the fast food industry. Um, I have one of my most successful friends started in the fast food industry, believe it or not, and just worked his way into a public sector job and is a property manager on the side. He owns real estate. Pretty sick, right? We all might be working in the fast food industry if inflation doesn't subside. I'm gonna have to get a third job. So here's the tweet that I saw that said, you know what? It's about time I circle back to real world assets. It says massive real world asset news. Top Italian state owned bank issued 25 million euros tokenized bond on the Polygon blockchain. So we've seen tokenized real world assets on Algorand, on ETH, on Solana, I think on Avalanche, using Axelar, and now Polygon for the second time. We're seeing them used for these quote unquote experiments for real world assets. And it becomes a thread. I don't know how to pronounce this Italian bank, but they're the largest lender in the country with over 1 trillion in assets. Now they're dabbling in RWAs and using the Polygon blockchain. And it says this was part of a European central bank experiment to explore how blockchain is going to work for central bank money settlement in wholesale transactions. All right. So they're basically stress testing Polygon and familiarizing themselves with that network. Before we go any further and I go into my commentary, my opinions on this. This is Polymesh. I didn't go through the whole site, but this is a good resource to keep in your bookmarks. Real world asset folder is necessary at this point, just like a meme coin folder is necessary, just like Bitcoin ordinals folder is necessary in your bookmarks on your browser. Whenever you don't know what to do and you're tempted to surf on crypto Twitter and doom scroll and reply and troll, I think you're better off going back to those folders that you set up with that reading material and just checking in on these different subsectors of the crypto economy and just see where the ball is going. Polymesh here. Real world assets. They say they can be fungible or non-fungible tokens that represent traditional finance assets on the blockchain. Real world assets can represent tangible assets such as real estate or intangible assets such as government bonds, carbon credits. I've got a tweet from Aqua Libre if we get to it at the end about carbon credits. And basically the tokenization is the process of bringing these assets on chain as security tokens to take advantage of blockchain technology, speed, settlement, transparency, all of that. Any asset of value can be tokenized and utilized on-chain in transactions, which means marketplaces, maybe custodians, portfolio managers, all of those products will need to be built around this. Here's a Medium account called Piggylet, and this is just highlights of real-world asset news from late July into early August. And they've got all of these nice visuals for data. Maybe someone out there in the audience can dig into this, actually get something out of this, maybe front run some real world asset value here. But they talk about legal and regulatory frameworks. Circle, the issuer of USDC, became the first global issuer to receive approval for such stablecoins in Europe. They're talking about USDC and Euro EURC stablecoins, right? So these legitimate issuers are going to need to comply with regulations, get licensing, and be basically favored by their governing bodies to be the one-stop shop for these real-world assets. I don't think we're going to see a lot of this happening, the way we see NFTs getting issued by anonymous people that just are known by a Discord name. I don't think we're going to see that. I don't think we're going to see tokens just launching willy-nilly without a process, similar to how common shares of stock register with the SEC in the United States. It's a lengthy process. It's an expensive process. This would at least make sense, because although the processes are difficult, a lot of the language probably needs to get updated. If I had to guess, as an outsider, a retail trader investor, but once it is approved and you're using blockchain, man, oh man, you could trade 24/7 and you could eliminate a lot of overhead and a lot of middlemen. And here's some of that data. It's rwa.xyz. You're going to want to bookmark this. rwa.xyz. I do need to have a place with a running list of all the analytics tools that I share on the stream. But it says here, total RWAs on-chain, $11 billion. Small. It's nothing compared to the overall crypto market cap. But it is saying there are 99 issuers here. And I'm sure this number's low. 60,000 people are holding real-world assets on-chain. This number's nothing. This is nothing. If you built a mobile app, a crypto mobile app, this is how many people you want to download your app every day or use your app every day. They do separate stablecoins from total RWAs. You could see, if you want to consider stablecoins to be RWAs, real world assets, as currencies, it looks like they make up over 90% of total RWAs right now. And it's saying there are over 100 million stablecoin holders. I'm guessing that means how many different wallets are holding stablecoins. I mean, I've got multiple wallets holding multiple stablecoins. So this doesn't mean individual holders, most likely. It means wallets, I would guess. It's very hard to track how many actual individuals are using this stuff. We've seen total real world asset value increase and with a huge uptick here in Q3 of 2022. I don't know if that's when a new stablecoin was issued, something like that, or maybe some huge protocol issue that I'm not aware of, or maybe just a new way to calculate this data. But let's take it from here. It's more than doubled in 2 years, right? That's 50 to 60% growth, and then another 50 to 60% growth the following year. And it looks like it's starting to go parabolic. Listen, guys, bridges have gotten better. Wallets have gotten better. There are just more chains with more protocols in general. Liquidity is fragmented, but you have more opportunity for these legitimate use cases of crypto to grow. One of those use cases is stablecoins, right? So stablecoins have become a little bit more reliable since UST implosion, and the infrastructure is better. As much as I knock the lopsided amount of funding that goes into infrastructure, it's better. You can't deny it. Let's hide this for a minute. Let's talk about real world assets and why this is something that banks ultimately want, and they're going to basically be the lobbyists for the crypto industry to push this through. I mean, tokenization in general, we already named some of the advantages, but just efficient settlement, right? You want this stuff to settle quickly. And then, of course, being able to make illiquid markets more liquid. I have some silver bullion. It is a pain in the ass to buy and sell that physical silver. Anyone that has too much of that, they're never going to be able to offload it. Maybe you'll be able to borrow against it with these tokenized real world assets or trade it in small quantities rapidly, the way you could trade tokens. Great. This is one of the reasons why tokenization is an actual legitimate practical use case for blockchain and crypto. And I said that, for years, financial institutions, they have been exploring how to do this, releasing internal documents, setting up kind of research committees, coming up with documentation to give to their high-end clients when this stuff is live and usable and the proper infrastructure is there, tested, and ready to go. It's actually rare, probably, for any of these big, multinational banks to not have some digital asset or blockchain project happening, either publicly or behind the scenes. And we've had this downturn in the crypto market 2022, 2023, but that's really when production ramps up for a lot of these, it looks like. And I'm looking at a stat now, you can't see it. It says the Boston Consulting Group predicts that by 2030, the combined value of tokenized illiquid assets, such as real estate and natural resources, will approach $16 trillion. Now, before I did this stream, I did go off and I hunted down an expert in real world assets. Someone who I'm going to have on the channel. He's a former lawyer, handling some international consulting as it relates to crypto and real world assets. And he let me just pick his brain for a half an hour. A lot of this doesn't make sense in some markets, and real estate being one of them. He said the United States, this is not going to take off the way people think, for the simple fact that you could already buy fractionized real estate through these different, basically they're phone apps, where I think it's Peer Street, things like that. You could buy $5,000 worth of a apartment building and earn yield on it. This is already done. But in other parts of the world, some of this might make more sense. And he and I talked about the different challenges, whether it be technological challenges, which he thinks a lot of them are solved, which is why we see this ramping up of RWA narratives. But the other is regulatory, and he said we're not close to solving that in a lot of the West. But anyway, let me keep going here. So I'm going to read right from this article. In simple terms, through the use of blockchain, organizations can represent real-world assets as these tokens, which can be fractionalized, traded 24/7, self-custodied in many cases, and they have a backing. Whether they have a one-for-one redemption is maybe a whole nother story. But it's the idea that it's representing something that actually exists, like maybe gold, like bonds, like a currency, or like real estate. Let's talk about the advantages here, and then I'll get into some more statistics. But number one is just faster and more efficient settlement. Tokenized real-world assets will allow banks to do what they currently can't do on their current infrastructure, which is outdated by decades. Delayed settlement has all kinds of problems for banks. It's usually caused by inefficient manual servicing, all these middlemen, or settlement periods that are just not realistic in today's world of lightning fast transactions. And originally, this is obviously in place for a reason, right? They want to limit counterparty risk and all that. But now with blockchain, we can kind of cut corners, it looks like. Tokenization now will allow these institutions embed transactional data and automated processes like interest calculations. Couple this with atomic settlement, instant settlement on the blockchain and on the blockchain ledgers. Assets can trade securely in minutes. And of course, this presents huge operational benefits to global businesses. Remember, the main driving selling point of Bitcoin was that it's borderless. It's borderless. Institutions don't have to worry about assets being trapped as they pass through conventional rails, different settlement periods, settlement life cycles, as this article mentions. And there's an example here. It says February 2023, Siemens expedited the issuance of 60 million euro digital bonds on Polygon, highlighting the operational agility of tokenization. So that's number one, it's faster settlement. Number two, automation. Tokenization allows automation of both asset servicing and transactional functions. Everything end to end is digitized. Single source of truth, right? You have the blockchain now. It says here, this will drastically reduce reconciliation overhead and removes errors caused by all the intermediaries. The other thing here, tokens are programmable. They also are smart contract capable. They can self-execute pre-agreed functions, calculations, compliance, disbursements. AI will find natural integrations here as well, I would imagine. Number three is fractionalized ownership or fractionalized ownership. Man, the way it works now, fractionalized ownership is tough, right? You could basically have an LLC and then you could buy, let's say, a property, and then you can have investors, 10 investors with 10% ownership of the LLC. Therefore, they are 10% owners of the asset. There's legal costs, there's administrative costs, and in the end, there's still that trust me, bro, and also you have risk depending on your jurisdiction, right? You might have limitations on the number of participants. Liquidity is still an issue, right? How do I get out of this LLC? How do I sell my 10% to another owner? How do I borrow against it? How do I actually exercise ownership over it? Well, tokenization, it simplifies all of this, definitely lowers the barrier of entry and opens the market to new investors. If I have $50, maybe I can go on Solana or Avalanche or Polygon and buy $25 worth of a apartment building in New York and then $25 of an apartment building in Singapore. I'm diversified with only $50 in the game, and I can unload that anytime I want and then buy right back without going through, all the processes that exist when real estate is being bought and sold. I bought a house, man. It is the process just doesn't make sense. Yes, it's very complete. The amount of middlemen that I had to deal with and the months that went by. My experience buying a property, it was a cheap property. I only was putting down $13,000. I was pre-approved for $330,000. Pre-approved. The bank said, you can borrow this much money. And I said, that's okay. My property is only $130,000. So I put down 10%. I'm pre-approved for $330,000 and I'm only borrowing like a third of it. And the process still took 4 months. If I'm pre-approved, why can't I get that money that day? It doesn't make any sense. Buying real estate's a disaster. The closing costs were $7,000. So I put down 13. I had to pay another 7 for the closing costs. They did the appraisal during the process. They had to do an appraisal twice because so much time was going by. And what's funny was I bought the property for $129. By the time the second appraisal came around, the property already appreciated in value 5%. So I had 5% extra equity in the property with absolutely no way to ever tap that equity unless I sell or refinance the house. It doesn't make sense, but fractionalized ownership, it just smooths things out. It makes things make sense. That 5% extra equity that I gained because of the closing period, I could if it was just tokenized, I could have given that to somebody else and said, hey, now we're partners on this rental property. I'm giving you 5%. Now your job is to find the tenants, vet the tenants, do the landscaping, and make sure all the bills are paid. But I'm going to set this 5% on a stream where you get 0.1% every so often until the 5% is earned over time. You can do this with tokenization. You can do this. Number 4, maybe the most important one, is you have real-time transaction data. The block is immutable, auditable data. It can be linked to banks directly and their clients directly, and this removes costs. You don't have to run these massive systems. The overhead is essentially removed. And then, of course, it says here, the ledger itself supercharges digital portfolio management with the ability to provide a single view of private and public asset data. This is going to revolutionize the way portfolios are managed. Maybe people don't want to custody their own assets. They shouldn't have to. I would love to have my own wallet showing my various portfolios with one of those portfolios highlighted in a certain way that I know, oh, that's the one that's being managed by Fidelity. That's the one that's being managed by a DAO. That's the one that's being managed by my 401k manager. All these things are going to come. It just seems like it's not going to come exactly when everyone thinks it's going to come, like this cycle. I've heard Crypto Sailor mention this before. He says this is key. Blockchain ledgers allow for a better risk distribution model for all large-scale information infrastructure. And I remember him talking about this on a space where these companies are responsible for storing lots of data. And man, it seems like protocols that do this, whether it be Jackal, Filecoin, all these other ones, will be able to take the risk off of the entities themselves and just loosen up the process here, and also cut costs for in the end, customers pay for this risk management. That's not what I want. We'll wrap it up here. I've got a couple screens I want to share. What would a crypto stream be if we did not talk about tokens and speculating on where we could profit off of this? Where can we profit without actually engaging in the real world asset trading and ownership itself? Well, this is a good place to start. This is dune.com/crypto/choreo/real world /RWA. I'll put this in the description for you guys. And on the left-hand side, there's a nice little list of real world asset tokens. I'll publish this to Twitter. This is where I would start my deep dives. I don't think that we're going to see an explosion of real world asset tokenizations. That expert I mentioned earlier, who I spoke with, he says 10 years. So we are early. The next bear market, this is going to be a post-it on my desk every day, 15 minutes, research real world assets, find early plays, find the early movers and the shakers. Which ones are partnering with banks? Which ones don't have to partner with banks? Which ones are in favorable jurisdictions? Which ones are the best at verifying the assets that actually back the tokens that are being traded on their platform? This list is where I would start. I mentioned that Aqua Libre, I had one of their tweets. This is it. This is a carbon credit market that does have some licenses and approvals in the EU. They do have a token on Kujira. It's the AQLA token. I think the token bounces between 1.5 and 2 cents or 0.15 and 0.2 cents, something like that. I did buy some a while ago. I haven't done anything with it. I haven't staked it, nothing. But now with some uncertainty of Kujira migrating over to Thorchain, which I think is going to be massive for some of the tokens involved, not all, this might be one. Could you imagine a liquidity pool on Thorchain, carbon credits, where you could swap Bitcoin into carbon credits without wrapped assets? Could you imagine that? I would love to get these guys on. If anyone in the chat or watching this can get me a one-on-one with Aqua Libre, they've been ghosting me since their token launched. Maybe they don't want someone like me popping off at the mouth about speculating on their token. I don't know. Maybe they don't like my content. Maybe they don't like it. I don't know. But I would love to talk to these guys about the licensing, the registrations, and why this is better than what's out there in the real world asset world. Last tweet coming up. Here's my guy right here. CryptoStream. This guy built a massive following just talking about tokens, factual information, sharing data, and then his own take on it with his experience. He's a full-time crypto guy. He built this in the bear market. And he's showing RWA token performance August overview and how it's holding up the last 30 days. Looks like a bunch of these big ones took a big hit. Is this a buying opportunity? I'm not here to tell you that. Like I said, I think we're early. A lot of these good tokens might sell off 90% in the next bear market. I think a lot of good tokens are. But where do you start your research? This guy did the research for you. Just go follow his Twitter, CryptoStream Hub. He's got a Telegram. He posts all these thoughts ahead of time. Let him do the research for you. He's screening. He's a screener for you guys, for us, right? And he's saying Bitcoin's down about 8%. All these are down way into the double digits, except for whatever that is, probably stablecoin. Are you holding any of these? Take a look. Take a look. I've heard of Ondo. I've heard of Pendle. Couple others maybe. Do you think the real world asset narrative will come back this year? Everyone says yes. So people, in my opinion, I think people are too excited about this. And a lot of the token value is going to be driven by pure speculation, not actual merit value, underlying value. But it is not too early to research this stuff, right? In my Telegram, I will start posting sector-specific data. People can do what they want with it. I like to follow DPIN. I like to follow Bitcoin developments, whether it's sidechains, L2s, ordinals, runes, BRC20s, all that. My Telegram is the place to be for that. You can get to it. My link tree is in the description of this YouTube video, or if you're watching on Twitter, it's in my profile. Join the Telegram. It's not a lot of conversation to follow. That's where I do most of my giveaways, and that's where I drop token info, content info, and just any type of contest that will be interesting to you. Ooh. That's not what I wanted to happen. Let's get rid of this. But that's it for my stream. We covered tokenization of real world assets, why banks are in on this. And I gave you the 4 reasons why in the stream. Watch it back. Look at some of the tokens that I mentioned. research them, share the info, get the word out. If there's something not on my radar that you think should be on my radar, just feel free to reach out to me. I'm Joe for Deadcat on YouTube and Twitter, and my links and my contacts are in my link tree. That's it. That's all I got for you. Hope you enjoyed this one. Hopefully you'll watch it back and check out some of this kind of this trend, this narrative, this developing narrative around real world assets and how we can front run this and get in just as early as the institutions that are adopting it. Take it easy.